let me save you from making a mistake that could follow you for years. If you're thinking about buying a home in the greater Lansing, Michigan area, one thing you don't want to do is you don't want to cut corners, you don't want to rush the process, and you don't want to take shortcuts just to get under contract with somebody. That's why I made this video, because I watched buyers lose tens of thousands of dollars from cutting corners. In fact, they have a home they feel they can't sell, they feel like they're stuck in it, or they regret buying it within the first year, not because they picked the wrong house, but because they chose the wrong shortcuts. Hey everyone, my name's Seifert, and this is my YouTube channel, Lansing, Michigan Life. I created this channel for people who are just like you, looking to relocate to the Lansing, Michigan area. You need to know all the ins and outs. I have pros, cons, map tours, anything you would need to know. Go ahead and explore it. Our team is the #1 YouTube relocation team in greater Lansing, Michigan. So feel free to reach out anytime, whenever you want to chat about your real estate goals. All my contact information is in the description below. And if you haven't already, subscribe to my channel so that you can be the first to be notified when a brand new episode of Lansing, Michigan goes live. So again, I created 10 dangerous home buying shortcuts that you need to be aware of, because for me as a real estate agent, it is my job to be able to protect you. And I'm also a Ramsey trusted agent, so some of these concepts I'm going to be talking to you about are financial. Some of them are shortcuts that should be, well, duh. But some of them are things that you just don't even think about. And so buying a home using shortcuts is like building on sand. Everything might be great at first, everything might be exciting, but when interest rates rise, when property taxes rise, or life just throws you a curveball, then all of a sudden, that weak foundation that you have, everything just sinks. And yes, Lansing, we are more affordable than many places, but just because we're more affordable doesn't mean that you are exempt from risk. So the first dangerous shortcut that you need to be aware of are zero down or minimal down payment loans without a plan. Now, I want to be abundantly clear here. I'm not anti-FHA, I'm not anti-VA, USDA, or MSHDA, which MSHDA is a first-time homebuyer program in the state of Michigan, stands for Michigan State Housing Development Authority. They provide down payment assistance as well. However, what you need to be aware of is that, let's say the interest rates go lower, then refinancing, you won't be able to refinance, or you'll have very little equity to refinance, because to refinance, you gotta have equity in your house. The second thing too is selling early, like let's say you sell in 2 or 3 years, can mean that you have very little equity. And also, if the market does take a little dip, that's going to affect you the most because you hardly have any equity in your home. So with MSHDA, the first-time home buying program that we have there are some income limits with that. So they offer down payment assistance. However, what you need to be aware of with the down payment assistance is that it could be a second loan for you. So it's something added. And if you decide to sell early, you're gonna have to pay that back. So a loan, it's only a loan that's forgiven after a certain number of years. So you have this unexpected second loan that you're gonna have to pay back, and you might not be able to afford it. I've had that happen to a client before, that they decided to sell within a year after having the house, their life circumstances changed, and they can only sell it for a certain amount before they actually have to start bringing money to the table. So it is a very real thing that you need to be aware of. Also with the zero down or the low down payment that you were to have, you also have PMI, which is private mortgage insurance. That's something monthly that you're gonna have to pay with these low down payment programs. So you definitely have to know your numbers, and you have to be aware that you might have to pay more amounts than maybe what you're comfortable with. So if you do have more money to put down, definitely do that. But again, you don't want to be in the poorhouse with this stuff. So number two dangerous shortcut that you need to be aware of has to do with asking your parents or having your parents co-sign your loan. This one just gets me a little nervous. I'm not saying that you can never do it, but what happens is somebody wants to buy now and they might not have the credit to be able to afford their home, so they ask their parents to co-sign on the loan with them to help maybe their debt to income ratio. However, when this happens, what the parent needs to know about, and if you have a really good lender telling you this, and you're prepared, then go for it. But a lot of times this doesn't happen, and the parent doesn't realize that their debt to income ratio is affected, that maybe it could affect them for future borrowing. And then if you, as the person, maybe you make a late payment, then they go after the parent for it. And then family Thanksgivings and Christmases might not be too great. So just letting you know, I know every circumstance is different. It's just having parents co-sign can make me a little bit nervous. Just be aware of it. Number 3, and this doesn't necessarily have to do with a loan right now. I'm getting a little bit further away from the loan, but this is a dangerous shortcut for sure that I see happening still in our area in the beginning of 2026 is waiving inspections. And many people do it because maybe they put 5, 6, 7 offers together and they realize, hey, I want to try to win out on this offer, and so I am going to waive inspections. Finally, I'm going to do it. And I'm telling you, there are ways that you can write in the contract. There are ways that you can still make your offer very attractive, but not waive inspections. I told a story a while ago, but I'll say it again. There was somebody on one of my listings that decided to waive inspections, so it was on my sellers. They waived them, and then they moved into the house and they said the fireplace doesn't work. And they waived inspections. The disclosures, we had it on there, it was unknown whether the fireplace worked. And so they were stuck with like a $6,000, $7,000, $8,000 bill when they had the fireplace inspector actually come out. And so when you waive inspections, that could get into your bank account, into your savings, having some unexpected things that you weren't anticipating because you thought maybe walking through the house that everything was going to be okay. But I'm telling you, I'm begging you, please do not waive inspections because there are so many things that you cannot see that only an inspector can see. So definitely do not do that shortcut when looking for a home. Number 4 is having an adjustable rate mortgage as a plan. Now there are some adjustable rate mortgages, also known as ARMs. This is a loan type that you can do when buying a house. What they are is you get a certain term where you have a lower interest rate. It could be 3-year, 5-year. Some places are doing 7 or even like longer, 7-year ARMs. So that interest rate stays low for a certain period of time. And then after that term is over, then your rate shoots way up. The goal with it is to hope that you are able to refinance your loan to a lower interest rate, because especially with some of these ARM loans that are 5, 7 years out, you're hoping maybe the interest rates will go lower and then you can refinance and you can just settle on that lower interest rate. But again, that is taking a risk. You don't know what's going to happen with the market. So that's something that just makes me nervous for people using it as a plan, because if the interest rates, if they don't go down, then your payment could go up by hundreds, if not thousands a month, just because you wanted to use a shortcut to be able to help you buy that home and you wanted to do something that would be a little bit more risky. Again, it's kind of like insurance. Insurance has to do with risk. You can do some risky things when buying a home. It just depends on how bad you want to roll the die and see what happens, right? Number 5. This is a major one, is maxing out on your pre-approval. Maxing out on your pre-approval. So just because a lender gives you a $400,000 pre-approval doesn't necessarily mean that that's what you should go for. If you have a really good lender, they'll be able to find out what you're most comfortable with, what you want your monthly mortgage payments to be. They'll also include taxes, insurance, all of that stuff. Because what the monthly pre-approval does not do is it does not always factor in the taxes that you will have in a certain area that you're going to look at. Why? Because there's like 30 different cities and so many different taxing authorities in Lansing. So they're just going to give you a rounded number, okay? But a lot of times if you go to that tippy top, you have to be sure with your debt to income ratio that is extremely low. Really what you want to do, and I made a video about this, you want to spend roughly about 33% of your income on your house payment. Now, 𝐉𝐨𝐬𝐸 says 25%. It is extremely tough to do 25% of what your take-home pay is and apply it to your mortgage. So 33%. If you go up to like 40, 45% from what I'm hearing from lenders, you might be eating ramen. So, it's one of those things where you really have to crunch your numbers, check on your numbers, but don't just max out your pre-approval and think like, hey, I'm just gonna go this high because this paper says I can go that high. Definitely crunch the numbers. Number 6 is using only online lenders. I know it's easy. I know it's a shortcut to be able to just go online, type in your info, get that pre-approval because it's fast, because you don't have to talk to somebody. But using a local lender is extremely important. I do have a local lender contact in my description below that you can check out. Very reputable, with Dart Bank, and you definitely want to reach out to this person just because they know the local market. So using an online tool, okay? The thing that you have to be aware of is they are not Michigan specific all the time. They're more nationwide. Also, they have some underwriting nuances that the local lender's gonna know, like, hey, in Lansing, like this is what underwriters will do. The nationwide ones might have different stipulations, which could make it a headache for you down the road. You get an offer accepted and they just make it a headache from start to finish when you have that offer accepted up until close, because they're making you submit this or that, or they lose this or that. I've seen it happen time and time again. So I'm strongly encouraging you, I'm not gonna name out those companies on here, but I'm strongly encouraging you, be very careful of online loan companies because they don't give you the full picture all the time. They're there to market themselves and to try to sell you a product. So be careful. Number seven, and this is a big one, is misunderstanding down payment assistance. I know that I spoke about MSHDA, the Michigan State Housing Developing Authority loan. So I want to get into this in a little bit more detail, because down payment assistance, it can be incredibly helpful because with MSHDA, you get up to $10,000 of free money, which you can use to help go towards closing costs or to help make your principal go down, right? So that does save you, with the way the current interest rates might, it might save you 50, 60 bucks a month, okay? However, again, and this is according to how long you live in that house. If you sell that house within 3 to 5 years with that down payment assistance program, they're going to want to be sure that you pay that back, and they will make it a second mortgage on your home. Definitely want to be aware of that. There are some places and some banks that I know of that give grants. You definitely want to be sure that these grants are not something that you're going to have to pay back in the future, because it might sound really good to be able to use them, but then you didn't look at the fine print, and come sell time, you have this unexpected loan that you have to pay back. Number eight, and this is a big one as well, is skipping a buyer's agent and just feeling like you can just go directly to the list agent. Why is that a problem? Well, the list agent, they actually, in the beginning, they represent the seller. So they know everything about the seller. You walk in, they're not gonna be able to give you the advice that they gave to the seller beforehand. And then when you come in to try to use them, you have a choice of, do I want representation or do I not want representation? If I want representation to have an agent handle this, well, then everything is neutral and they can't give you any advice. If you say, I don't want to be represented, I just want to figure this out myself, you're all by yourself, and you can't just call up the agent and be like, hey, can you tell me this? Can you help me out here? You can't just get them for free, okay? Also, the thing that you have to be aware of is that in listing agreements, it is signed in the listing agreement that if a listing agent brings an unrepresented buyer, that they still get paid by the seller. You don't necessarily save yourself a lot of money. So you're not gonna get any advice on, hey, what should I look out for here? You're not gonna get somebody who's gonna be in your corner, helping you out, making sure everything goes smoothly. So you don't wanna take that shortcut. You wanna use a reputable buyer's agent like myself to be able to help you find a place. Number 9 is draining your savings to buy a house. So I think I told you I'm a Ramsey trusted agent. Dave Ramsey says you wanna have a 6-month emergency fund. Okay, and I feel like that's very doable. You wanna have that emergency fund for when life happens, right? And you wanna be able to have that there. What some people do in our area is they do an appraisal guarantee when they make an offer. What is an appraisal guarantee? They say, hey, if I offer above the asking price and the house doesn't appraise, then I will cover the difference of that. And it can be very easy to be like, hey, I wanna win, I wanna take this, I just wanna win the offer, right? But you have to be smart with your money, and if you can't afford to do an appraisal guarantee, or you're gonna drain your savings, then yes, you won the offer, but you might start having some regret, especially within that first year. You definitely wanna be able to live. If your car breaks down, you wanna have money for that. You don't wanna be house poor. So don't regret that decision. Use your head a little bit more than your heart. A house is an emotional sale, I get it. Fall in love with the house, you want it so bad. It can be heartbreaking that you don't get it. But you have to look at your figures and realize, hey, I'm not gonna drain my savings just to be able to have a house, okay? So definitely keep that in mind. Number 10, this is one that I hear some lenders encouraging people to do, and it just depends on what your comfort level is. So this is gonna be a little controversial. Number 10 is borrowing from your 401k. This is a dangerous shortcut, okay? Because you are getting into your future retirement to be able to help you buy a house. This is why it's key when you're speaking with a lender that they also have your best interests at heart. Because if you have to get into your 401k to help you buy a house, you have to be sure that, okay, I'm still gonna be okay for years to come. Everyone's situation is different. But when you start going into your 401k, what you don't realize is that you take a withdrawal out and you have to pay interest on that. And then there's a penalty for withdrawing from that. You have to get with your financial advisor to be able to figure all that stuff out. But those are some things that you need to consider of like, am I going to get into my retirement to be able to help me buy a house? And I get it. You hear people renting, you don't want to rent for the rest of your life, but is it worth it with that 401k? Every situation's different. I do know some people that have gone into their 401k, then maybe they repay it after they might sell their house. There's different ways that you can do it, but if you have to dip into your life savings for your retirement, you could be in some dangerous territory, so definitely proceed with caution with that one. So again, what can we learn from this? Not all low down payment or zero down payment programs are bad. You just have to be able to have a plan. You have to know your finances. And really what it comes down to first is knowing your budget first, then having a strategy, and then being in a house. Not, let's get into the house, then we'll figure it out. Oh, by the way, like we'll figure out our budget later, okay? Do not do that, okay? Really, like your priorities should be figuring out your budget, making sure everything's good, then finding a strategy, and then finding that house. And I am more than happy to be able to sit down with you with your real estate goals of what's best for your family or what's just best for you. Contact me at any time. All my contact information is in the description below. What I also love to do is I love to be able to talk with you on Zoom. Also, if you are considering other areas within the state or even within around the nation, I do have a referral network of people that if you're like, hey Troy, like I've appreciated your time, but I'm not gonna move to Lansing, I can refer you out to other agents that I know of as well. So keep that in mind as well. If you like this video, give me a thumbs up and hit the subscribe button if you haven't subscribed to my channel. I hope this was beneficial to you because again, you don't want to do unnecessary shortcuts when buying a home. It's gonna be your greatest asset. So until next time, everybody, take care and make it a great day.